This is Andrew Stotz of Stotz Investment Research, watching the street in India, the product where I look at analysts and their forecasts and expectations. First, let's talk about consensus recommendations, and we can see that India is all over the place. In 2012, it was a sell when we're talking about bottom-up relative consensus recommendations. Then it went to the upper end of the neutral, but never to a buy, down to 2015 of the sell, and now back to neutral. So it hasn't been a buy for 5 years. First, we can see the companies with the most positive recommendations. There's 5 of them. And Aegis Logistics provides supply chain management services to oil and gas and chemical industries. The share price has gained 800% in 3 years and 35% year to date. So there's where analysts are most positive in their recommendation. And what about the companies with the most negative recommendations? Well, Bank of India is a less exciting stock in the financial sector, where low asset quality has pushed down the share price by about 60% since the beginning of 2015. Let's move on to consensus earnings estimates and see what we find there. Well, analysts are pretty consistent. Their forecasts are about 20% every single year. And every single year, the companies do not deliver. The actual growth, in fact, has been either zero or negative for a long time, right? That's nuts. So, the companies with the highest consensus EPS growth estimates are listed right there. There's 5 of them. And in fiscal year 2017, Tata Communications is expected by analysts to turn around its loss to the highest EPS the company has ever seen since 2009. What about the companies with the lowest consensus EPS growth estimates? Well, there they are, 5 of them. After a price increase in voice calls earlier this year, Idea Cellular lost market share, and analysts expect continue low earnings. Finally, let's look at target price. What is the consensus that analysts are saying? And we can see that in the past, from 2012 to 2014, they've estimated a negative return. Now they are estimating a 14% return going forward. So that's increased a lot from 3% the last time I looked at it. It's mainly due to poor overall market performance. With the market going down, analysts don't move with the market. Now, the companies with the highest consensus target price expected return, there's the 5. 2 of 3 financials with highest target price expected returns provide loans secured by gold, MNFL and MUTT. And another company, and these are the companies with the lowest consensus target price expected return, SAIL has the most negative recommendations and an expected downside of 33%. My goodness, percent. Want more of our research? Well, just sign up for our free newsletter at becomeabetterinvestor.net/join, and I'll see you there.